Mr. Menon, good to have you. It's been a healthy growth overall. You've reported a profit as well this quarter. Question is, do you see the traction continuing? Do you believe that this revenue growth as well will accelerate in the coming quarters? Mr. Menon, we cannot hear you. Okay. I think if you can just unmute your mic, maybe.
Yeah. Good morning, and thank you for having me on the show. Yes, we did report a decent set of results yesterday. My expectation is that we will see continued growth in terms of the recovery process. You'll appreciate during the pandemic, we went all the way down to zero and have recovered from there. This recovery process continues. But part of the reason is the fact that we are seeing stronger demand. Even if I look at the forward bookings for the upcoming quarter and this and the next quarter after that, we are seeing a 32% rise in terms of demand as reflected in our forward bookings for travel services, which is the leisure business. So I'm fairly comfortable saying that this trend should continue for a couple of more quarters, at least in terms of strong growth.
Can you give us a sense of corporate travel? Because that is the big, in a sense, ledge for Thomas Cook. When you say forward booking, are you referring to corporate travel as well?
No, Nikunj. I'm referring to the packaged holidays. And I will let me answer your question around corporate travel as well as add something else to that. Corporate travel actually led the recovery for us because as we came out of the pandemic, corporates started traveling. We also saw several Indian corporates start trading with us. And so we've seen a growth in corporate travel. If I just look at the recovery in terms of volumes from pre-COVID to now, there is 135%. So we've actually exceeded 2019 numbers. The other aspect of travel, which has really grown dramatically, has been in the incentive business. You're aware that Thomas Cook handled a large number of the pre-G20 meetings that India had between January and August this year. Additionally, we've done 2 Khelo Indias. We're currently doing the national games in Goa. So we've seen our incentive business also grow very strongly. That has been in about a 12-month period, but the corporate travel business has grown over the last 18 to 24 months.
Mr. Menon, I'm surprised to see you on TV. I was of the view that you should be in Wankhede Stadium wearing Indian jersey, maybe in a Thomas Cook box with your family.
It's at 2 p.m.
He will reach early. He'll reach early. Support for India, right?
Thank you, Nikunj. I appreciate your compliment. Unfortunately, I haven't been to a single match as yet. We're still toiling, but I think having said that, Nikunj, we've seen growth across various companies. If you look at Sterling, there's been strong growth. If you look at our destination management businesses, which were slower to recovering. If you look at DEI, which is our imaging business based in the UAE, but across Southeast Asia, despite the UAE being in an off-season, we've actually seen strong growth there also, primarily because domestic travel within China has come back in a big way.
I want to specifically understand what everybody seems to be talking about right now. You referred to G20 and Khelo India. You've done 2 seasons, and there is a World Cup which we spoke about. How much of your revenue this year has come from events which may not occur next year? And next year, sir, there is elections, lot of events, lot of decision making may actually not happen from April to, let's say, June or July onwards.
So if I look at my MICE volumes, the Khelo India and this thing will be barely 15%. So I'm not too worried about that in terms of profitability or the volumes, because we know that corporates have scaled up their incentives programs. And I don't think, while the elections will affect some of the government-related business, and G20 is obviously not coming back, my expectation is that corporates will continue to trade because they're also witnessing strong recoveries. And just as the speaker before me said, that there is a trend of growth that is directly related to the incentive business and the corporate travel business. I must add that we are seeing new additions in a manner that we had not seen pre-COVID in terms of Indian corporates traveling with us. Lastly, I think what is important is that the pandemic taught us a few lessons where we significantly re-engineered our cost structure. And if you look at it, even today we are 30% down from pre-COVID in terms of costs, and we've added technology. So we've digitized a lot of our processes, which gives us productivity benefits, which we hope to retain over a period of time. So my expectation is that despite some of these one-offs and geopolitical pressure, we will maintain a decent trend in terms of profitability.
What is the outlook as well when it comes to your margins on the back of operating leverage? What kind of margin outlook are you looking at down the line?
So I think I expect that our margins to be stable from here on. If you look at our EBITDA margins, be it for at a Thomas Cook level for the half year, it was about 5.4%. If I look at it on the quarter, it's 9.89 for the half year and 10.1 for the quarter. It's all very, very stable. So I expect that these margins to continue because we are very focused on margins. And, we want to ensure that if we're going to drive the productivity benefits to the bottom line, margins have to maintain their current levels. And I'm fairly comfortable with that.
Joining in, Mr. Menon, margins will be stable, confident as well that growth will continue for the next 2 quarters. So yes, positive commentary all along, and the stock is cheering that.